All right, welcome everybody. We're getting a ton of comments for people who can't hear. How about you just relax, man? Just give us a couple minutes, man. Shit.
Ooh.
Welcome everybody. We're gonna wait a couple minutes here for everybody to come in. Go ahead and give us a mic check and let us know if you can see the screen here. You should be seeing a couple charts up of some earnings after hours. So go ahead and sound off and let us know if you can hear us and you can see the screen, which you should be able to.
I
Danny, what's
was
going
looking,
on?
Luch. I don't think I can see questions. Just a heads up.
Okay,
Okay.
okay. You know what I'm
You're
gonna
gonna have
do?
to relay that over to me if
Yeah, I'll do that. Yeah, I'll do
okay.
that. Not a problem. That actually works better.
Okay.
All righty. Why don't we go ahead and get started here? All right, welcome everybody. This is our Tuesday's just sort of market recap here, weekly market recaps. Just kind of to kick off the week and everything, and then Thursday, you guys get Jesus again for some more sort of wrap up sort of talk. Today, I think, and what we're going to do going forward too is introduce a couple of speakers too, and introduce a couple of folks from the room that have been with us for a while. They want to share some tips, share some tricks, stuff that they're using to advance their strategies as well. So today we have our guest here, Ronchero Friedman. And actually, we did a trader interview on him a while ago. So what I'm going to do is I'm going to grab that link and I'm going to send it to you guys too. So make sure you read that article too, so you can see a little bit about his trading history, how long he's been trading. The man has been through some serious ups and downs. And I love people like that. I love people like that because they're cowboys, you know what I mean? And I myself am akin to a trading cowboy as well.
No,
Jesus
no, you're
knows
not a
that
cowboy.
too. He calls us degenerates. I call it a cowboy. Same shit though. So you guys will get to hear from him in a little bit. He's going to talk to you a little bit about some hedging strategies. We get questions about that stuff all the time. And again, Jesus is a equities trader. And sometimes we need to bring in a little bit of options expertise as far as how to hedge some positions, especially if you guys are holding aggressively long, which a lot of you guys are in this market. But it's definitely worth it to comment here on some of the stuff that's going on right now. I mean, monster gap down. Does anybody know? Jesus, why did we sell at 8 p.m. last night? We
I
just
I
dumped it.
was
Was it
asking.
news?
I was asking the same question. I don't know. I
Yeah.
mean, I was looking around for some news. There was that release the memo crap flying around and all that stuff. And then worries that he was going to fire the guy from the DOJ. They were just looking for excuses. But I think it was all said and done. I think it was a rates thing where interest rates are starting to creep up. But let's be honest. You've been in the game. I've been in the game. Ronchero's been in the game. Whatever excuse is around at that time, they're going to grab. And the truth of the matter is, people look for any excuse to take profits. It's the inevitable. It was going to happen.
Yeah.
It
Yeah.
happened, overnight into this morning.
Yeah, and the gaps too. Like again, like I was, me. I'm just sitting there waiting for me to be able to short something, and I knew it. I knew it when I saw it this morning. Like pull up the pre-market for this morning on the SPY, and I knew it from this morning that I wasn't gonna get it today. I fucking knew it, right? Like we opened at 283, or we opened at like 282, and we ripped a little bit, and then we just kind of tanked. And I was like, you know what? This is, once they make it that obvious and there's so much aggressive pre-market sentiment in there, it's not that aggressive. So you have to find the one-offs. You have to find some of the names that are just going to be weak, regardless of what is going on in the market. So, a lot of the big, thick moves, and especially the thick premium that you guys are going to see overnight. I mean, you all know, and you can agree to this as well, a lot of it happens overnight. A lot of it happens, a lot of the aggressive, volatility premium that adds to, some of these calls that we've been watching for weeks now have all been overnight moves. And it's not surprising that the market decided to put an overnight, 300 handle dump here. Which was aggressive. I saw it last night, and I'm just laughing. I was just fucking laughing, Jesus, man. I was like, you know what? I didn't even want to wake up tomorrow. I don't even want to see
Yeah,
this tomorrow. That's what I was.
it could get frustrating. And you know what? Aside from it, just normally happens, especially in this market environment that we've been in. The overnight, you get the big chunk. That's where the juice comes out of. But you throw in earnings. You throw in Blondie today talking the State of the Union tonight. By the way, we forget. You talk about the FOMC. You sprinkle in tomorrow. You got so many different balls in the air right now.
Yep.
And just earnings itself, is known for that, right? It's almost like a day-to-day thing. The reaction to earnings is a positive one. You get that gap up in the morning, and you're just waiting to see if they sell into it or buy it, right? And we're in that type of environment.
Yeah, absolutely, absolutely. And again, like this is where the games get played. But listen, like with such ranges, and I think Jesus and I are going to talk about this before we bring Ronchero in. This is one thing I just wanted to hammer home. Like when you stretch out and we get ranges. Yo, there's fucking trades out here, man. You just gotta chill and you just gotta be patient and wait for some of these things. Yo, pop up that win, Jesus. Pop up that win today. I mean, you guys all know this one as, this guy got smoked here. The stock was $200. What did it gap down to? Like 160 or something like that today. And you kind of knew, like we were so weak. And the SPY was down and everything, and Win was just kind of relatively, just kind of sitting around 164. It was just kind of sitting around there, and it was just wafting around, and the calls were pretty expensive. And then I think, was there some flow on this as well today, Jesus? Or was it yesterday?
Today they came in late. There's been some blocks. It's been messy, though. It's been messy with all the news around it. But like you said, you could see this thing just kind of like consolidating. They couldn't push it any lower, and then springboard higher from there.
Right. So I bought the 170 calls. Jesus, can you pull up the 170 calls right here during the beginning of the day? So let's see if we can get a day chart here of these 170 calls. And again, like we were planning on holding these, for a good period of time. So again, you're talking about what, $1.72 here. Yep. And you're flipping for some pretty good premium here once the stock hit that strike price. So again, these ranges are so wide that even if you're trading an Nvidia or you're trading a freaking whatever the hell it is, the Netflix was insane today. Printed 83 or 73 off the open, and then ripped 7 points or something like that. And then it was more or less nonsense for the rest of the day. But if you guys are scalpers and everything, when you have these wide ranges, you really have some sweet opportunity here. Jesus, can you comment on, when the SPX gives us a much wider range and we see a lot of these bigger ranges, what are the kind of flow things that you see, or what's the kind of things that you see usually, from the room too?
Yeah, see, I mean, in general, and, I like to day trade a lot. That's my bread and butter. I'll swing here and there if I see something sharp enough. But, the market we've been in, Lucci, and you can vouch, you were getting kind of frustrated too, where you just melt up every day. I mean, it in banks. Let's take like this, for example, okay? Like, what are you going to do with this as a day trader? These things are bullish. The flow's bullish. And basically, you just got this little melt up mode where you can't buy the highs intraday because they fade them basically. Not much, but they fade them off the highs. There's not enough upside room there for you to take advantage of. So this is kind of like, this is just a waste of time here. So there was so many things like that. Let's be honest, that unless you had some intraday weakness to try to do that red to green type of jammy we like to do, the opportunities, they weren't as juicy anymore. And as a day trader, you look for some volatility coming. It's not a bad thing. You need some weakness. So when you see some call sweeper activity that comes in, and like you said, the move is worth it. And a lot of times swing traders will fall into the trap that because they see a juicy move intraday, that they instantly just got to hold that overnight. You know what I mean? Where in this type of climate, the easy money is that, again, playing those ranges on an intraday basis. And we might see more of that, obviously, coming out of a market that's been, just straight up here for quite a while.
Right. And you know what, one thing I noticed, and I got to throw it out there because I know, you probably catch it too, Jesus, is that the market always gets you used to something. You know, when we have some kind of a big move, it always gets you used to something. Now, what has the market gotten us used to? It's gotten us used to the fact that we're always going to come back. The next day is going to be green. And generally speaking, you can buy any dip, you know, and expect to be in the green here, especially on the option situation. So as long as you have time on your options, you're going to be making money. Now, once we widen up these ranges, that fucking trade gets broken. That trade gets broken. And for some reason, when you look in all the chat rooms across the board and you look on Twitter, people just freak out. And it's all because they get used to something that's working. And then when all of a sudden it doesn't work anymore, they go absolutely insane, man. Jesus, you noticing the same thing too?
Of course, of course. And, you know, here's the thing. Even in more, I guess, a broader term and general term, the market, this market, has basically got us used to, if you sold anything, you're a jackass, right?
You're a jackass.
Right. If you sold Netflix, if you had a nice entry and you sold those calls for 80% in a day, you're an idiot because you had 800% over the next week, right?
Oh,
so
man.
Anybody who was locking in those profits, okay, it almost like you feel stupid, okay? But this is one thing that I learned early on in my career when I started to see the light, is that a lot of times in certain market conditions, you get, like you said, in the habit, you get used to doing the wrong things. And it's almost like you're better off doing the right things and looking dumb, you know what I mean, over the short term, because when the environment starts to switch over, it's, you know, it's going to come in handy and you're going to be the smarter one out of the bunch. But that's what the market, Jerry Lucci, anything, and we've seen it, you know, this is when you're getting a little too hot on the bullish side. When people are trading Netflix, okay, we were talking about this in the room for a good 2 weeks. Let's say you buy Netflix at 210, okay? I'm just using the stock now in general. You guys who play options, you can use the calls. You buy Netflix, your entry's at 210. You sell it at 220 in 2 days, okay? That same player, that same trader is coming back a day later, okay, after selling at 220, and another entry at 230, $10 higher than where he sold it at.
Yep.
You know what I mean? Like, if you were bullish, you sit in the trade, roll up, roll out, do something like that. They were climbing the ladder. They were playing the same names all the way up, you know, buying higher, buying higher, buying higher, and they get used to that. And then eventually they get caught. And what happens now in this type of environment where the range is starting to widen, they're going to get in on a decent entry into weakness. They're going to get that quick hit. They're not going to take it because they're in the mode of, if I sell, I'm an idiot. Let me just hold up thing. I'm going to nail the bottom. We'll be at new highs. And what happens? You know what I mean? So
one of the biggest emotional pitfalls that both Jesus and I see in the room every day. And remember, like, we run a chat room. And we've been doing this for a while, so we can see your emotions leaking through the words that you use. Even the sentences and the word structure that you fucking use, we can tell if you guys are winning or if you guys are losing. Your emotions are right in the words that you use. And the biggest emotional pitfall we see is guys that miss the move and expect the same shit to happen. Now, granted, it might work for a couple of times. It might work, you know, for even months, you know, and that's the trade that pays off. But those guys that, again, they come in at the wrong places, especially in the options. If you don't get that move, your options go to nothing. That data will eat at you immediately. You know, and that's, I think, what we're going to start seeing pretty aggressively. It's obviously going to depend on how some of these earnings shake out. So far, we haven't seen that many. You know, so we're waiting for some of these big tech names here to go into it. So that's kind of a good segue, I think, for us. Jesus, is there any, you know, we got everybody asking too, any interesting calls here or puts here going on for some earnings this week on some of the big tech?
They're talking about earnings. I knew. I was like, how long into this webinar
are we long, right? Shit.
About earnings flow, right? Like, what are we even doing here, right? We're trying. Everybody wants to be a degenerate in this game. I mean, for good reason. They've been making money. And we're talking about protection today. We need our heads examined.
Indeed. 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 All right. Well, let's bring in the protection situation here. Jesus, you want to talk about any other interesting flow or anything interesting that hit today that we should be paying attention to? Any names
Yeah.
here?
Basically, guys, if you don't know me by now, and most of the members do, and they stop asking, or you know what's funny, because they know, my whole outlook on earnings is pretty obvious. Lucci, you the same. People know how we feel about being a crapshoot and so on. It's almost like they try to shy around asking me about earnings flow because they're worried I'm going to jump down their throat. But
Yep.
guys, if you don't know me by now, I mean, here's what I would do, what I'm doing during earnings season, and what I would recommend anybody who wants to be prudent and do it the right way as opposed to reading the flow here. This is watch list time, in my opinion. Okay.
Yeah.
Whatever names you're looking at into earnings, whatever flow you like in names into earnings, you sit, you wait. Okay. You wait, let them announce earnings, see how the stock reacts. Maybe you get it at a discount. Maybe more flow comes in. This is a time more of building watch list rather than rolling the dice into earnings. I don't know what these things are going to do off earnings. Lucci doesn't know. Ronchero doesn't know. These sweepers don't have an idea of what these names are going to do. Earnings flow is a mess. It's a mess. And what I mean by a mess, you got protection out there, especially when a market's weak like it is right now. Okay. You got stock replacement out there where people, these big guys are selling hundreds of thousands of shares of the equity. Okay. So for example, let's say I'm long AMD and I'm a fund. I own 500,000 shares. Okay. I don't want that much principal at risk into earnings right now. Okay. They sell chunks of the equity and they replace it with upside calls. Okay. So even though it looks like on your scanner that somebody's buying a crap load of AMD calls, there's a possibility that he's just replacing stock with that position. And that happens a lot. Okay. We don't know for sure each and every time that happens. I wish we could have that, type of information, but it's not there. So don't even think about it. Okay. But we know that the odds of that, the frequency of that during earnings season is really high. Okay. It happens a lot. So there's no point in trying to waste your time trying to figure out and get a read off flow. You don't have much of an edge here. And right now is a better time to develop a watch list, get a measure of how long you are going into earnings, like we're going to talk about with Ron today. Protection, is there something I can do to protect my downside if I'm a little uncomfortable on the long side? That's my approach during earnings season. And then the total opposite happens just like that. Post earnings, I think, is the most important flow out of everything. Okay, because that's where you see the true colors come in. If there was action pre-earnings, they like that name. Trust me, they're going to be back post-earnings if that stock is near the level or cheaper than where it was pre. Okay?
Indeed.
So that's even a stronger signal if you see flow come in post-earnings in the name you like. So that's what I would recommend. I know it goes in one ear and out the other. Okay? I know it's not, there's no sizzle on that steak. But I'm being honest, it's the truth. That's what I would recommend you guys do. That's what I'm doing. And then, like I said, time flies. Earnings season gets by us. We're going to start to see, in my opinion, some of that rotation come back in that we quickly forgot about. Remember that rotation from sector to sector to sector, Lucci, we were seeing before this melt up? Remember that? That was a good time. Like, that's where you have an edge at a flow. You can see where the smart money's going. When everything's melting up, that's not going to last too long. It comes to an end, and then the smart money starts looking for value and that type of thing. So that's what I would be doing. Build a watch list. If you're going to play nice and easy. And if you're too long, pay attention to what Ronchero has to say today, because a couple tidbits you can take out of that to protect your ass on the downside.
All right. All right. And for those of you guys who aren't in the chat room yet, I mean, again, you can just get the private Twitter feed. Just go to wallstreetjesus.com. We do have a 3-day free trial for the room as well. And then for the room, you'll get Jesus on the audio and then sort of a live feed. And you'll get a lot of data and a lot of flow you know, that just hits the room. Plus, you'll get the commentary too on the stuff that hits the room as well. And then you can also meet some very interesting traders, like the one that we are about to intro. So his name is Ron Friedman. But he named himself Ronchero for some reason. So we're going to get that story. You guys have the article that I sent you about the interview that we did. There's some questions that I myself want to ask him. He is also a student of the St. Lucci Master Course. So we're going to ask him about some of that stuff. But Ron, go ahead and say hello. And where the hell did you get this nickname of Ronchero, bro?
Hey, what's happening? So Ronchero came from a group of friends that we hang out with on a regular basis. And this was one of those weekends up in Tahoe where a lot of tequila came with us, and I like to cook. So I made some huevos rancheros for all
I knew huevos rancheros was going to be included in I knew it. I fucking knew it.
So I made some wicked ranchero sauce, and it's stuck ever since.
Nice.
All right, man. All right. So listen, why don't you give everybody just an intro on your sort of trading background, how you found me, and you know what you're up to these days. There's a goal that you were trying to hit. You were trying to get back to 7 figures. I'm wondering if you got back to that. So throw that all in the mix, man. How did you get started, and give us the whole story?
I don't know if we have enough time for that whole story, or if everyone wants to do that.
Speed it up.
Speed it up. So, wow. So this goes back to the 90s, and obviously you can take a closer look at the trader interview that I wrote for you guys to get more in depth. But definitely been through a bunch of ups and downs, several account blowups, and some personal issues where I went through a divorce, etc. So I've had a bunch, I've lost a bunch, I've had a bunch, I've lost a bunch. And recently, kind of what I did was, all right, I can't let that happen again. So I'd build up, pull some money out, buy a condo, build up, buy some money, pull some money out, buy a condo. So at least now I have income coming in for if I do blow something up again. I know that I've got money coming in to rebuild that. So
you got your kitchen, you took care of your kitchen expenses is what you did.
I did, exactly. So gotcha. That's where I sit right now. I'm not at that 7-figure mark yet, but okay. I inch closer every month. So I'm one of those guys, because of what's happened in the past, that when I go to look for where I think sizing up makes sense, I still size up, but I don't size up with I don't go all in. I need to live to fight another day. So, hindsight is 20/20. And when I see it, when I feel like I should size up, I still don't go as deep as I want to, just because I don't trust being able to be there 100% yet, if that makes sense, if that translates.
It does. It takes a while to get, dude. I mean, remember who you're talking to here. Jesus knows too. We both have that kind of mentality, and when we see that trade that is there, and we know it's there, it's still difficult to it's still difficult to put the hammer down. You know what I mean? Unless you're in that frame of mind, unless you're in the right frame of mind. So a lot of these guys, you guys might not know exactly what he's talking about, or you might not have been there. But when you're in the zone and you're feeling it, and your pulse is the market, so to speak, that's when you drop the hammer and crazy shit starts happening.
Indeed. Yes, so I think I describe my personal style right now as I'm more of a hybrid trader. So I look for companies that are good, legitimate companies that have earnings but have been beaten up. Biotechs are a good example. So I will look for those where, on a day like today, where the market kind of rolls over a little bit, those companies have already been beaten down. So I'm already getting into those positions as a swing position. So I'm looking to buy them as a swing long-term, 6 months to 12 months. And then I'm looking to collect premium on them. So I'm selling front week calls against them to stack cash. And when I stack that cash, that's where I'm rolling that over into a protective strategy to protect my overall portfolio. So I will also
Can you
look
give us an
for.
example? Can you give us an example? That was a pretty good, and this is something that I love that he does. Oftentimes we'll be in the same positions, and when options kind of get, super volatile, and you can see the volatility kind of caked into these things. Ronchero will come in there and start selling the shit out of calls, or whatever direction that we're playing, and he'll book all this easy premium out there, and he's quick enough to do both at the same time. So give us an example. Give us an example of one of these bio names where you rip that trade off of. Jesus, pull up the charts.
Yep.
Okay, so the most is, like right now, Celgene is a good example. Celgene got crushed. How many weeks ago was that? A couple of months ago, right? Back down to 90 something and change.
Yep.
So I kind of stepped in and I put, when I'm putting a position on, I'll put them on at, let's say, a quarter at a time. So if my max size or capital outlay for this particular strategy is, let's say, 20 contracts or 50 contracts, and I'm looking here, it's been beaten up. Okay, I'll put 20 on, or I'll put 25 on, and then I'm looking to sell the front week. So for example, when it was in that 90 range, I'm looking for it to pop up a little bit. So when it popped up into that, what was it, 100, 103, 104 range, and it lost momentum, and this is where tape reading comes into play, is you can see that momentum die. And when you see that momentum dying, I'm looking for maybe 2 or 3 strikes out of the money to sell those calls and just either let them expire worthless, or as soon as I've collected 80% of that value, I'm closing it out and I'm looking for the next one.
Got you. Okay. That's pretty, yeah, that's, I mean, again, makes sense. It makes sense. Can you give us one more example? Let's do one.
Yeah,
Let's do one more.
I can. Okay, so another one that I can give you that wasn't beaten up, that works, that has worked really well for me, is Boeing. Boeing has been fantastic.
Boeing.
Animal.
Nice.
Yeah, so Boeing I jumped into right at the end of the year. I played a short-term option. I can't remember where I jumped in. It was in the 280s, high 270s, low 280s, and got like an 8-point pop. So I immediately took that money and I went out and I bought the June 310 contract for cheap, like $6 or $7. And every time Boeing hit a plateau, and you can see it on the chart there where it kind of capped out around 300, I was selling premium and collecting it. And then when it took off, the other beauty about collecting the premium is if you're wrong and you're long the contract, you can still buy your premium back and let it run. There's no loss because you've already made the money back on the long. So you just don't have the cash balance, but you have the balance and the value of the equity or the value of the contract. So same thing. Boeing has been another one where, I mean, that move from the end of the year to where it peaked out was about a 480% return for me on contracts and collecting the premium.
Now, just to clarify here for everybody else is that, I mean, you're going to a sort of far expiration here, and then you're selling weekly premium, or you're selling the front month premium, correct?
Correct. Yeah, and those are, when I look for candidates to buy and sell like that, they need to have weekly contracts. Obviously, they need to have long dated contracts. The spreads can't be so whacked out that it doesn't make sense, and it's got to be enough premium in the weeklies for it to pay me, for it to be worth my while. So if it doesn't meet those criteria, I'll pass on it. Okay.
Yeah, and again, like I have my own sort of writing strategy where I just write weekly premium, every single week. And I think, when Ronchero, correct me if I'm wrong, Ronchero, when you were taking the master course, like, this was something that you and I were pretty aggressive on, because again, it's just a clean way, to make safe cash. I never really, kind of rolled positions though. And tried to get more upside. I was always just kind of a shorter term kind of player, but just having that sort of time, on a monthly, on a name that is obviously catches flow and things like that, that's where some serious upside comes in. How often do you use the flow, to help your decision making as far as selling premium, or as far as which, stocks to trade or anything like that?
So the flow is really important for me from a sentiment value, because if I'm sitting there and I'm reading the tape and I'm seeing the flow match the tape, it tells me everything I need to know.
Perfect. And where did you learn how to read tape, bro?
From you and Jesus. Actually, from you. You're the only one that's ever taught tape. So that's where I learned tape.
Indeed. All right. So what are you up to now? What trades you got going on now? What are you up to these days? What are you working on?
Well, so all right. So obviously, I blew out a win.
Yep.
And when I roll my contracts up, and it depends on where I'm sitting. And there are some devils in the detail when you're longer term focused in how you're trading. I know you don't use a lot of the Greeks and stuff like that. I find them very useful when I'm in longer term trades. So for example, like longer term on a Celgene, well, how do I know what contract or what strike I should be getting into? I'm looking for, when a company's been beaten up like that, I'm looking for a longer term option. So 6 months on the early side, 12 months on the late side. And I want it to have a delta of around 80. And the reason I find delta important is because delta tells you two things. One, it tells you percent chance that it's going to finish in the money. And number two, it's going to tell you for each dollar up the stock moves, how much can you anticipate the price of your option going up. So it's a little bit more of a predictive factor for me. And if it's that far in the money, then I have a better chance of better profitability on it when it moves. And if it does tank, the delta will decrease. So the velocity at which my option is decreasing also slows down.
Yep. Okay. That's great. That's great.
So that's where I come from when I'm using those. I guess it's a dashboard. So that's my dashboard.
Right. Okay. All right. Jesus. Any input here? Are you just fumbling around?
What I'm always fascinated by, traders who find a niche, right? It's just, and that's what happens for a lot of traders. It's like everybody wants to copycat or do the same thing.
Right.
They find some trader they think is making money on some social media platform, and they just want to ride his hot picks and stuff like that. It all comes down to finding your niche that you're most comfortable with, that you build the most confidence in, and you see how he learns a little bit from everything. Takes a little flow, a little tape reading, but then comes back to what the strategy he feels most comfortable with. And combining the three, is that stuff that will put him over the edge. And anytime I hear that out of traders, a certain style, a certain niche, I'm always fascinated by it. But that's awesome, brother. That's awesome.
Indeed. That's one of the things too that we stress too for any of the new users that come into the world here, and come into the room. We get a lot of Jesus and I get a lot of questions all the time. How do we use this flow? Should I buy this? Which one should I buy? And all this kind of stuff. And we can't stress enough, of course, that if you go out there and buy all this stuff, like these are not alerts that Jesus and I will push out and be like, yeah, fucking buy this thing, you'll make money. That's not how it works, and we don't want to do that either. You know what I mean? Like even when I did the course, and Ronchero was one of my students. Like he'll tell you here as well. Like we are as super real as it gets. We can't do that kind of stuff, that pump and dump shit and all that kind of stuff. We don't do any of this. Again, this is just sort of information. These are large players that are throwing out bets in the markets, and they're doing it aggressively. So we watch it, and as Ronchero said, like for sentiment. I don't trade I don't trade 90% of the names that Jesus trades. I don't trade 90. I would even say 98%. I don't trade shit. All I use it for is sentiment. I just need to know, damn it, are we bullish? Can I hold this thing a little bit longer? Or damn it, are we bearish and should I take some fucking profits? Like that's what I use it for. And Ronchero uses it for something different. Jesus uses it for scalping equities. So we have a lot of people in here that are using it for different things. The important thing is for you to find out, how it sort of fits your world and how it fits something comfortable that you can sort of manage and handle.
Well, yeah, and Lucci, I mean, just look at it, realistically. Like Ronchero can't go out there and tell everybody on this webinar to trade his way. You know, they may not have the account size. They may not, you know, have the education behind in the option world to do so. So it's impossible to have one, you know, blanket strategy, blanket statement. You know, put it this way, you're not going to get anywhere. Okay, you make some money in a bull market, but you're not going to get anywhere until you develop some sort of game plan and guidelines that you feel comfortable with and you have confidence in, no matter what. You understand the next earnings hit that you make means nothing. You're going to spend that money probably in the next week or two if you make some money off the earnings anyway, okay? And quickly forget about it. It's about, again, it's more confidence than anything else. Like, that's the difference. Ronchero has confidence in what he does. You know, more than likely, I can't do what Ron does because it's foreign to me, honestly. And I don't have
it's a whole other world for you, dude. It's a whole
so, you know, so that, I mean, and that's one thing that I think a lot of, especially newer traders, fail to recognize, or maybe it's a lazy approach. I don't mean that in a mean way, but they're just hoping maybe, you know, they step upon some crystal ball stock pick system or something like that that's just going to spit out winners all day long, and everybody can tail along for the ride. It doesn't work that way.
Indeed, indeed. All right, so it's getting to 5 o'clock. Not that we don't want to. We had the idea of just doing the webinar and then just talking shit about Mr. President, like when he comes out and starts doing his thing and just laughing. But you know, we do want to make sure you guys watch. Those of you guys who do want to, and those of you guys who are just going to watch the Twitter feed and look at the comments, obviously, that shoot out after. One of the things that Jesus said, you know, really kind of resonated, and I wanted you know, Ron's opinion on this too. Was the confidence factor. You know, I mean, you know, you guys see the article here. I mean, anybody who takes a seven-figure loss and blows out accounts, which most of us here again have done. What is it about confidence that is so, I guess, fleeting? What is it about the mental part of the game, you know, that is so difficult? You know, and Ronchero, how do you keep yourself coming back to this shit? You know what I'm saying? Like, how do you know, we get this stuff all the time, of course, but we are speaking to a bunch of new traders out here that I'm sure would love to hear your opinion, man.
Well, you know what? For like 5 years after that loss, it was nuclear winter. There was very little light at the end of the tunnel for about 5 years, and okay. It was a total rebuild, reevaluate my life. What am I doing here? Like, what is this all about? So there were some not very pleasant moments during that time frame where I didn't think I'd ever get back into the game. Yeah,
and that's real. You see what he just said? Like that. Like that's real. You know, Crane here is telling you, Crane here. Denny Crane there's a lot of users here from our room. Crane is asking, did your wife tell you to get the hell out of the house? You know, there's a lot of like personal things that happen that, you know, traders don't talk about. And these things are real. They have to do with our lives, and they have to do with the influence that makes us either hate or love the market, you know, for what it can possibly do or for what it can take away from us. You know, and those are real stories that at some point I would love to put on the fucking camera at some point. But for now, you got to stick with us on the audio here. So Ronchero, continue, man. You know, where were you at?
So it was a rebuild, and Denny's right. I mean, she basically kicked me out. So there was a whole, you know, reprocessing. What am I doing with my life? I had to rebuild my career. I had to reinvent myself. I had to save up, and you know, going through a divorce with young kids is painful. It's very painful when you have a lot and it's taken from you materially. Yeah. It hurts, because if you're used to that lifestyle and that level of comfort, and so suddenly you're the herb that threw it all away.
Man, I've been there too. I have been there too, and it hurts because it's expectations. People look at you now, like now you got a whole world that you're supporting, with this lifestyle, and all of a sudden you can't support that lifestyle. You know, you're letting people down, you're letting yourself down. Like, that shit is a kick. It's not even a kick in the ass like people just joke around. Like, it is some serious shit. It is some real life-changing serious shit, man. Ronchero, continue.
Yeah. So, I just scraped and scraped and scraped, and I gathered enough to put money back in the market. It was post 2009. And I had found somebody who was willing to teach me options from the theoretical level. So breaking everything down to its grassroots level, learning the Greeks, learning all of the Black-Scholes models, blah, 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 blah. I don't use that stuff like you would think you use it. This is more useful. Reading tape, reading sentiment, knowing the other factors of how to use the Greeks is fantastic, but I don't need to know it to the level that I do. So that was kind of my edge of how do I get back in? Well, I got back in by starting to buy these companies that were beaten up and being in the trades. So that's how I started to inch my way back into the game. So, when I was at my low point, my divorce and all the other stuff, and the account, I mean, my swing was probably in the, 2.5 million range of what I was out of pocket. And, I had to build back up to an account size of $5,000 and then hack away and then got it to 10.
Crazy. That's crazy.
Man, see, I love this shit. I love this shit, man.
Yeah, it takes a pair of coconuts to come back to something, you know what I mean? With that big
most people, and let me just throw this out. Most people cannot get over shit. You know what I mean? Like, most people cannot get over. Most people take an L in life. They can't get over that shit. They ride into the graveyard with that shit. You know what I mean? Like, especially back in the day. Like, I feel like the millennials and the younger folks, like, we know how to move. We know how to move a little bit faster, and we know how to let go of things, a little bit more. But letting go of some shit, like, most people can't fucking do it. They die with that shit, never changing and never trying anything else, because then they end up scared. So being able to build back from nothing again, I mean, granted, he already did it one time, like, and I've been there as well. I've already done it once, but it's like, when you have to go back there, like, where you're going. You know that you have to go back to this place that you don't want to fucking be at, but you just have to do it in order to progress and all this kind of stuff. So there's a lot of mental things that are happening here. Ronchero, man, continue, please.
So, I mean, that brought me to where I think you guys want me to talk a little bit about today is,
sure.
Okay, so how do I survive the next nuclear blast? And that's kind of what my strategy is with the overall portfolio protection. So do you guys want me to talk a little bit about that, or you want me to keep
hit it?
Yeah. And Ronchero, if you could do this, try to keep it in simplest terms out there for even people like who are in equities. Because, like, coming from an equity guy, okay, like, anytime I would hear options as far as trading outside of the flow, I never had an interest. But if you're holding equity right now up at these levels where the market's at, okay, I think even more so you should be paying attention to how to utilize protection on the option side. You know what I mean? I'm sure you would agree. It could definitely come in handy. So try to keep it in as simplest terms as possible. I know you'll try your best there, but how somebody who just gets that uneasy feeling right now of being too long, they still want to participate, they still want to play, they still want to make money, but like you said, they want to avoid that nuclear bomb going off where it wipes them out.
Yeah, sure. So that's the trick. So how, what does your head tell you? And you're trying to play a timing game. When is it going to blow up? I can't do that game. I have to be able to sleep at night. So what I do is I look out 6 months to 12 months. What can I buy to give me protection where if I wake up in the morning and the Dow is falling out of bed 2,500 points, not only is my portfolio protected, but I'm going to make more money because of the spike in implied volatility, as well as the options rolling into the money. So the reason that, and how you select it is, okay, well, where's my portfolio? How much do I have at risk? I consider cash in its own way to be a hedge. So I don't include it in my calculation, but I look at what's invested and how much do I need to protect. And generally, as a rule, let's say I want to buy, let's say 2 to 3% of what's invested as protection in a long dated, out of the money, whether it's SPY, the Qs, or the diamonds, or
Right.
an indice like that. And what I'm looking for is I'm looking for a contract that has a delta of around 15. And I do that when the VIX is at its lower points. So let's say the VIX, a couple of days ago, the VIX was like $9, right? It was way down there. So that long-term protection that's when it's at its cheapest point. That's when I want to buy it.
Right. Exactly. So now let's take right now we're in, let's call it February. Okay. So right now, if you're looking to put on some protection, you would go at least 6 months out from Feb, you're saying, right?
At the minimum 6 months out.
At the minimum 6 months.
That's as close as I ever want to be.
Gotcha. Okay. And then you would look for now. So in other words, Delta is the easiest thing to start with. In other words, as far as picking a strike, or how far out of the money you think Delta is the first thing people should be looking at to get a gauge?
It's a combo of Delta and VIX. The VIX tells me when I should go look at the Delta. So if I've got VIX down in the 9s, I want to go look for a 15 Delta SPY, Qs, or diamond put.
Okay,
so you're not going to see an accurate reflection today, obviously, because of what happened.
Right. We were hoping to do this.
Those are cheap as fuck, though, correct?
Correct. But the reason I'm looking for that is because if there is a nuke situation, what's going to happen to the implied volatility? If I'm buying it when the VIX is around 9 and the implied volatility on these contracts is so low, the volatility on these they're gonna explode. Yep. And that's the secret sauce to it.
No doubt. No
So
doubt. And that's your protection.
Yeah.
Exactly.
Let's give them an example of what they can look at. Okay, let's say over the next couple of days, market bounces, whatever the case may be. There's a little retracement in the VIX. What's something right now for somebody who's out there who's saying, all right, shit, I'm way too long here. I'm feeling some pain over the last couple of days. It's okay. I've made some money, but if shit's about to hit the fan, I can't have all this blow up. So what's something September, let's say, is a good starting point, right? And then general ballpark around, you were talking about a 15 Delta. You're not going to find it now.
Those are too rich, right? Like you've got to be able to go deeper on those deltas to find what you're looking for.
Exactly. So okay. So and when do you feel like? And here's a lot of times, me myself, I even asked this question: when is it too far out? You know what I'm saying? Like when are you going too far out of the money where you should stop at that point?
Okay, so it's not. So what I'm trying to do is from a 6 to a 12-month window, I'm looking to sprinkle that entire 6-month range. Every time the VIX is in that 8 to 9 range, I'm looking to pick up a handful and basically build a ladder. So what's going to happen is I'm always going to have a rolling supply of 6 months worth of protection. That's my goal, is to build that little window. And the way that I manage them is every time the market continues to go up, if those particular contracts start to lose their delta at around 8 deltas, I take those, I sell them, and I go and I buy the next round of 15 delta puts. That's how I manage that little segment of the portfolio. So that's where, when I sell the weekly premium and collect the premium, that's what's funding the purchase of those puts. And if you don't have something that's funding those puts, it's going to become very expensive, and you're going to lose interest in it very fast.
Right. Plus you'll lose on the implied volatility anyway. So those things will just eat down to those numbers where you want to buy them shits in the first freaking place.
And that's why you're buying them when the VIX is down in the
right. So Jesus, to one of your questions too. You remember how we see some of those crazy, super high lottos come out there?
Yeah.
They're basically doing what Homeboy is doing over here, man.
Exactly.
But listen. here's the thing is that most people will look at that and say, this is not going to work. Even if the market craps, it's not going to work, and they're wrong. And the reason they're wrong is because the implied volatility. If it rolls over and that implied volatility spikes, what happens is at around 3%, I want my entire portfolio, a 3% decline overall, I want that portfolio to go to go delta neutral. Now, if it rolls over and we hit, 5% or 6% or 8%, I'm making money. It doesn't matter what happens to the rest of my portfolio. Those puts are making me money, and that's that cash is gonna allow me to buy everything that's on sale.
Right, exactly. And that's the way, I guess, a lot of traders, including myself, I mean, you don't look at them as their insurance, basically. I mean, that's what you're trying to do there, is ensure, what you got going on, what you're long right now. And again, you're trying to avoid getting blown up. The one thing I took out of Ronchero's story, and maybe this is I'm flying around topics, but what I find interesting too is that, like, when he blew himself up, okay, if you think about the period of time and the environment he came out of when everything was bullish, everybody making money, market strong, and then boom, everything blows up. And Ronchero's not the only one who got blown up. Let's be honest, right? There were a ton of other traders who got blown up during that time. But then, if he was protected, and that's what he focuses on now, is always, like he says, always have that protection there, always replenish that protection. It allows him to come back and look around at that 2009 level where you started to build up from a measly $5,000, Ronchero. You realize that? Like that 2009 period when you started to get back into this game, you couldn't pick a better spot to start all over again, right?
Agreed.
So, and that's what, that's the frame of mind you got to try to put yourself in, as a trader right now. We talk about this on the Saturday webinar. You're looking to ride the trend right now. You're going to enjoy the market as it goes higher. You're looking to, profit from it, obviously, as it pushes higher. But you got to just try to protect yourself from blowing yourself up at this point. And as long as you can do that, you live to fire and play another day. And the worse that blow up is, as long as you're around, you gave back some of the profits you made, the opportunities are there all over again. You know what I mean? And I think that's the mind frame to have out of all this.
Yeah, 100%. And guys, like, every single market will benefit a different type of trader. And remember, this shit is a zero-sum game. So while, people were taking a hit there in 2008, I was climbing to the damn top because I was short everything. I was short everything. And just day trading and scalping all that freaking volatility. Like, there was so much juice right there. I wish we could go back to that time, but we can't. You just keep rolling to these new periods, and that's how you sustain yourself and sustain your sort of career as a trader. All right, so we got to wrap this stuff up. Obviously, you guys want to watch the State of the Union. Maybe you do, maybe you don't. Tomorrow's going to be a pretty aggressive day, too. I think the rest of the week, too, since we have big ranges, there's going to be a lot of opportunity here. I don't think we're done with Ronchero here. I think we got to bring him back, Jesus. What do you think?
Yeah, of course. Definitely.
Indeed. All right, so let's take a couple of questions here. Most of this is for you, Ronchero. So let's go into a couple. Michael here is saying, could you please repeat how you react when you're selling out of the money premium against your position and the options you sold? Do you go in the money? So Michael here, you want to rephrase that? Give us a little clarity on what exactly you're asking.
I think what he means, but he'll probably clear that up. I think he's saying once you sold those calls and it starts moving against you, what you're looking to do there, I think, but let's see what he says.
Okay, yeah, he did say yes. So Ronchero, can you speak to that? So once you sell calls against your core position here, or puts, or whatever it is, how do you react? How do you adjust? If things don't go your way on the writing premium side? I think you did answer that question, but just go ahead.
The Boeing, Ronchero. So in other words, let's say you're in the Boeing, okay, you sold some calls, and now all of a sudden, Boeing starting to pick up momentum again. Let's say you see a little flow, you see the sentiment start to switch, Boeing starting to gather some momentum. What's the approach you take on those calls you sold?
Well, let me put some color to Boeing and how I was trading it. So I was short a weekly and I don't remember what strikes there were. I'd have to go back and look, but I was short a weekly at $2, and
Okay.
I think it was around 350-ish. No, it was lower than that, maybe 330-ish, somewhere in that range. And it had moved against me. It had moved against me by $4 or $5. So I had to buy it back. I was buying it back at a loss out of my cash, but where I was making money was because I was still long the other side, right?
The core position, yeah.
Exactly. So
Right.
yes, some money comes out of my account, but I didn't lose any money, because what happened was as the price of the stock moved up, the value of my option moved up, and at a certain point, I roll that strike. Typically, when I roll out of an option, I'm looking for either because the stock went up, let's say $5 or $10, or because the delta moved from, let's say, 80 to 90, and I'll roll down to another 80 delta option, or I'll roll to another, $5 up or $10 up. So that's how I recoup the implied, what some people would consider a loss, but it's not a loss, right? Does that make sense?
Yeah, because it offsets your core position is long Boeing. So you're losing money on the calls that you wrote, but your core position's still long, so it offsets it. And then you're adjusting the position. So the first thing, I guess, what Mike's looking at, rather than price of the calls, the premium, or price of the stock, you would still, delta is what you're looking at to make that adjustment?
On the long term, yeah, but not on the short term. The short term, I'm kind of looking for where I couldn't have predicted that move in Boeing. That was crazy. So
Right.
I was looking at it from a standpoint, if it's run X%, I'm selling a contract that's this far out of the money. I feel like right here I'm safe, and I wasn't, right? Like, but that happens how many times? Like, 2 times out of 10. That I've got to buy it back, right?
And again, if that happens, you're not losing. Basically, it offsets what you would have made on the core position.
As long as I roll it. If I don't roll it and it retreats, then I'm hurting a little bit, right?
Right. Gotcha.
Okay. What percentage of your portfolio do you have on the low low premium hedge? So when you go out there and buy the 15 delta SPY puts, what percentage of your portfolio would you say you're throwing in that?
For me right now, it's at about 6%, which is high. And the reason I want it that way is because I want my portfolio to go delta neutral at around 2%. So I'm a little bit more aggressive right now, and I might not need to be, but it just is one of those intuition things.
Got you.
Now, let me ask you a question. Do you use, are you using that 3% number? So in other words, if somebody out there, let's say, is long 6 different call positions right now, again, I'm just throwing examples out there, trying to think through their heads, because I get these questions on the Saturday. So let's say they long 6 different names, calls, whatever, spread out. You would still take that 3% approach. In other words, if we get a pull, okay, if we get a pull in the market, those calls, those positions, and we're talking about a big enough pull, they will all go to zero, basically, right? And you have that protection there. That's basically your only surviving element in a sense. Now, again, I'm not saying that's the right way to position, but these are the same guys that are asking about earnings flow. Is there a way to protect against something like that? Do you understand what I'm saying? Let's say I'm holding 5 different positions, and if we get caught in something, they're going to go to zero on me. What type of protection can I put on there?
Well, I mean, in that scenario, you would probably just want to sell calls against those individual positions. But I mean, I think I have a different view of it, because if it's an overall downdraft, I want to profit on the downdraft, right?
Right. And that's what I'm saying. A lot of guys out there, what they're looking to do is they want to be long right now, okay? And they're okay with giving back some of the profits they made, but they want to protect against, like what you labeled, that nuclear bomb going off. You know what I mean? They're okay with giving back a chunk of profits, but they don't want to get caught with their pants down per se. And is there some maybe something different than what you're used to doing? Is there a way to put on protection to offset that? Is there a recommendation or something you would look at in that style of positioning?
The only thing I would say to that is if what I proposed doesn't fit what you do, you would have to come up with something else. And my sense to that is now you're just trying to time when you think the bomb's going to go off, and good luck to you. I mean, cash is a form of hedge. You'll lighten up a little bit. You know what I mean?
Exactly. Well, right. That's my first answer, right? I'm an equity guy, and options can be very useful in a time like this because you risk basically your premium you're putting in. So what I say to them, my first response is just lighten up. You know what I mean? Stop being greedy bastards out there. Just pull up a SPY chart for Christ's sake, and you see what the hell we've just come to. You know what I mean? So
nobody wants to buy protection when you should be buying protection, right?
Exactly.
Yes.
That's the problem.
Yes, that is always the problem. And you guys can take that as a lesson too in options as well. Again, like the all those volatility spikes that you see, those things end up coming back right away. And nobody wants to take that profit when it looks the greatest in the world. Right? People want to buy up there. When your stocks look the greatest in the freaking world, you want to buy. You're not thinking protection at all. That's the place to look for protection. And again, it's very difficult, though, to train your mind to be able to look at it that way. So some of you guys, know what I'm talking about here. It's worth it to do some work. Come check us out here in the room as well as the master course. I think we're going to do another master course probably in March. We have a lot of other tools too that we can offer, to help you with your trading as well. Jesus, any other comments here before we kind of cut it off? Ronchero, thank you very much for joining us. I think we'll bring them back too. Everybody seems to have a bunch of questions here for you as well. A lot of you guys here too, just come into the room. Come into the room. You can talk to him every single day. We are loud and ridiculous in there sometimes. And again, there's a lot of activity there as well. Jesus, any last words here?
Yeah, no, and that's I agree. Ronchero should be back here, and I think he's a good example of what your goal in this game should be. You know what I mean? Is learn a little bit from each and every trader that's been around out there, and even if you take a little piece from one or two individuals that suits you best, that can mean the world. That can mean the world in this game. You know what I mean? And don't worry about trying to replicate or copycat individuals out there, because that shouldn't be your goal in this game. The next trade being a winner, that shouldn't be your goal in this game. You want to have some sort of strategy, some sort of game plan. And then once you have confidence in that, guys, that's the sizing up, and Lucci and Ronchero will be the first to vouch. The sizing up is, believe it or not, the easy part once you have the confidence, right? That always comes.
It's the confidence. Yeah, it's the confidence to know what to do with it. Like most people, and what Ronchero was saying too is like if you're not 100% there, you're gonna hesitate. And when you have size, you cannot afford to fucking hesitate. You cannot afford to blink. You cannot afford to lose and exit when you have it. Because once you have size in an option, listen. Like without the volume to get out on, you are it. You are it. It's you against the market maker, and that motherfucker knows you're there. He knows you're there, and he knows how much size you have, and he knows how much balls you got too. You know what I mean? So he tests you out no matter what, because he's got more cash. He knows he has more cash and more time than you. So if you get stuck in one of these options with size and you can't get out, you are fucked. You're fucked beyond belief here. And if you can't handle that, or you don't know how to move in and out of those things, this is where, this is where, you can really do some damage here. So again, like it takes time to get yourself in that state of mind. And it is a state of mind. I think, Ronchero, would you agree?
Absolutely.
Indeed.
No doubt.
All right. So listen, this webinar is going to be saved and everything, and it'll be on YouTube here, guys. If you want to talk to Ronchero too, he's in the room here with us. We got 3-day free trials. Just go to jesus.com, wallstreetjesus.com. You can see everything. We will see you in the room tomorrow. Hopefully Trump will say some ridiculous shit, And tomorrow will be a nice day.
Yeah, we get some volatility, right? Maybe we got some
Indeed.
volatility coming into the game for a change. So we'll see what
Indeed.
happens. Thanks for
Indeed.
stopping by, everybody. Have a good night and good luck out there, huh?
Later.
Thanks.